Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap last week's market action and discuss our game plan for the coming week. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get our alerts, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service, no Discord rooms or Telegram chat groups. Well, guys, the S&P 500 on Friday retreated 2.53% for the week to close at 4117, posting losses in 4 out of 5 sessions. The benchmark gauge's slide this last week resulted in it slipping into correction territory, with Friday's closing price marking a more than 10% drop from the S&P 500's 52-week closing high of 45.88, which was on July 31st. The negative milestone comes just 2 days after the Nasdaq Composite also entered correction territory. The main driver of Wall Street's retreat this week was a slide in mega-cap tech stocks, especially the Magnificent Seven Club. All members except for Amazon and Microsoft notched weekly losses, with Netflix down 0.8%, NVDA down 2.1%, Apple down 2.7%, Meta down 3.9%, and Alphabet down 10%. Google parent Alphabet delivered solid quarterly growth in its core search business. However, investors were disappointed with its cloud performance. Meanwhile, Facebook owner Meta provided cautious forward-looking commentary, noting that the volatility in the macro environment could have a big impact on the advertising market next year. The Magnificent Seven comprise nearly 30% of the S&P 500's market cap, and an advance in that club has been one of the primary drivers for the benchmark index's rally this year. Microsoft and Amazon were the two bright spots this week. Microsoft impressed investors with its quarterly Azure cloud results, while the latter smashed profit expectations and reassured investors of a strong future in cloud computing and generative AI. Though the third quarter earnings season dominated headlines all week, traders also parsed economic data and continue to keep an eye on the ongoing conflict between Israel and Hamas. Notable releases in last week's economic calendar included a significantly higher than expected surge in September new home sales, a U.S. Q3 GDP estimate which showed that the economy grew at its fastest pace since the fourth quarter of 2021, and a 0.3% month-over-month rise in the core PCE, the Fed's preferred inflation gauge, in September, its highest reading since May. Speaking of the Fed, all eyes will be on the central bank's monetary policy meeting and rate decision on Wednesday. Also on tap for this week, on Monday, we get earnings from McDonald's, Pinterest, and Transocean. Also, Apple is holding a product event that they dub Scary Fast. We get the Dallas Fed Manufacturing Index for October at 10:30 a.m. On Tuesday, earnings from Advanced Micro Devices, Anheuser-Busch, AMZN, Caesars Entertainment, Caterpillar, First Solar, and Pfizer. At 9:45 a.m., we get Chicago PMI for October. On Wednesday, notable companies reporting include Airbnb, BP, CVS, DuPont, Estee Lauder, Humana, Mondelez, Norwegian Cruise Lines, Qualcomm, and Yum Brands. We also get Chinese EV makers NIO, XPeng, and Li Auto will be on watch, with October deliveries due to report it. The EV reports from China are being closely monitored amid a pricing battle in the sector, and that will also have an impact on Tesla. At 9:45 a.m., S&P Global U.S. Manufacturing PMI for October, 10 a.m. U.S. ISM Manufacturing for October, and then at 2 p.m. the FOMC statement. On Thursday, earnings from Apple, Booking Holdings, Carvana, Coinbase, ConocoPhillips, Duke Energy, Moderna, Molson Coors, Palantir, and Starbucks. We get 8:30 a.m. U.S. initial jobless claims, 10 a.m. U.S. factory orders, durable goods orders for September. Apple will be the big one to watch. I'll be looking for the impact from China, which is the second biggest market for Apple after the U.S. There has been signs of weak demand from China. On Friday, notable earnings include Bloomin' Brands, CBOE, Dominion, FLR, Floor, Monster Beverage, and Restaurant Brands. We also get at 8:30 a.m. the U.S. jobs report for October. Economists forecast 168,000 job additions for the month and expect the unemployment rate at 3.8%. Average hourly earnings are expected to be up 0.3% month over month and 4% year over year. In my last video, I said I was going to go through a lot of charts, and here, this is a signal. This is most active on FinViz. You can go and run that and then look at the charts here. What I like about FinViz, as I said, they have the charts drawn, the trend lines drawn for you. Look at forward. Here we had the trend line support at 12, broke through there, 996. SQQ, which is the inverse leveraged short ETF on the NASDAQ. You can see this one is breaking out here, while the TQQ, which is the bull 3x ETF, is breaking down. Tesla likewise broke through this wedge. If we break through the 200, we really don't have support until about 185, 190. Same thing, SPY. We broke through the 420 moving average, 200-day moving average, which was the critical level, and we're below that now. Here, you can see here, it's just breaking down. What else we got here? Intel had a good week, good earnings report. Amazon, good earnings report, but running right into trendline resistance. Bank of America also, look at this. This was major support here at 26, breaking down through there. XLF, which is the financials ETF. Keep your eye on the financials. Everyone's talking about commercial real estate sector. The Fed's been hiking, and that's, the Fed hikes until they break something. And when they break, it's in the financial sector. We saw Silicon Valley Bank go under earlier this year. People are wondering if there's more shoes to drop. QQQ, this was the major support here at 350, broke through there. 345, next support is 340. AMD earnings report this week here. We got trendline support at 90. We break under there. It's going to be ugly. Same thing with Apple. We're just hanging on by a thread. We need strong earnings reports this week, and actually we want to see the employment report come in, job growth to come in positive, but not too hot, which the Fed would really like. IWM, I've been talking about this. It's just been a horrible year for small caps. This has been breaking down. It peaked just at the end of July, just like the S&P 500, just under 200. We're at 162, broke through the major support of 170, looking ugly. SoFi here. I know someone commented that they're long SoFi. They really like that stock, but it's really a precarious situation right here. I'd be cautious here. Google, big breakdown last week. What else am I looking at here? Mullen, that's a crappy stock. Don't even want to look at that one. NVDA, 400 is the key level. It breaks through 400, going to go down to 350. And to me, this is a reverse head and shoulder. Head, shoulder. So again, this thing is looking very, very toppy here. Be cautious. If NVIDIA breaks down, it's going to get ugly in the market. So keep that in mind. What else we looking at here? A couple other stocks. Going through here. These are the most active. Pfizer, just been an absolutely horrible investment this year. Broke through, just incredible downtrend. TLT, this is the 20-year plus Treasury bond ETF. You can see how that's been doing, which is just absolutely not good. Treasury bonds down 15% year to date. Unbelievable. I mean, for a lot of people that are in these ETFs, it's really gotten hurt. And they're like, we own treasury bonds. How can we get hurt? Well, the fact is, they bought bonds last year when the interest rates were lower. Why would you go and buy a bond? Or, if you're trading, if you're selling a bond, why would I go buy a bond that pays me 3% when I can go get 5%? So that's why the value of those bonds have gone down. But if you hold them to maturity, you will not lose money. But again, like I said, right now there's a lot of options in high interest savings. Capital One's paying 4.3%. You can go through treasurydirect.gov. You can buy short-term T-bills and get 5% plus. So there are options for your cash right now. Microsoft had a big breakout last week, but we ran right into that resistance on earnings. You get a positive reaction in the market to an earnings report, but the market fades. That is a bearish sign. So certainly concerns there. Payment space has been absolutely gotten killed. Type in a few names here. PayPal just been absolutely gotten crushed here. Broke through this trend line resistance here. Just been on a complete downtrend. Stock down 29% last year after even getting killed last year. I know some people have been posting that one strategy is you're going to get tax loss selling this year. So I think there's going to be more weakness in these names. And then what you're going to have is next year you're going to get a lot of people coming back into these names that have gotten killed. It's like the dog of the Dow theory. You go and buy the worst performer of the Dow the previous year, and it usually, the next year is a positive year, as these are big companies. They're not going away, and, people are just looking at them too cheap. So PayPal is one to have on your list if you're looking at that type of trade. But another one that's gotten absolutely killed has been Square, or Block Inc. This is another one. I mean, this one was $300 down to $40. So for people that are saying, why would I trade penny caps or small caps when I can go buy big caps? Well, you've gotten also killed in big caps if you were thinking along those lines. So, the stock market right now, it's not easy. As I've been saying, trade them, don't own them. Focus on singles and doubles. Don't go looking for any home runs. It's just absolutely, it's a tough market. But a couple of other names that have really been horrible. The cannabis sector, there was optimism as the DA was looking to reclassify marijuana. The stock, the MSOS, is the U.S. Cannabis ETF, went from $5 to $10 and then just completely retraced. Look at this rounding top, absolutely unbelievable. Tilray has gotten killed. Speaking of bad investments for the past 10 years, Disney. The stock has done absolutely nothing for the past 10 years. You go back to 2014, this is where we were. So you're buying at the same levels as 2013, 2014. Just unbelievable. And this is one of those stocks that a lot of people buy for their kids. It's Disney parks, Disney animation, Star Wars, and just absolutely, rallied, peaked at 200 during COVID, and then just absolutely gotten decimated since. So just been a horrible investment. Bitcoin, it's over 34,000, just under 35,000. But look at Coinbase. This stock just cannot get going. Pulled back, we're into 90, we're at $70. Bitcoin's at the highest price of the year. It's a double off the lows. It was 110 back over the summer. We're at 70, and you go figure. You would think that Coinbase would be back at the highs, but it is not. Couple of things I was looking here. I talked about last week, LIAN. I said I called this one here. I said we're going to get continuation since $3. Rallied through there, but we're looking toppy here. RSI is at 90. Be cautious, guys. If you're still in this one, use a trailing stop. But really, there's not much to talk about. There's in terms of small caps and penny stocks. I'm just not seeing much right now. But I will, of course, be scanning pre-market, looking for news, looking for catalysts. And if I see anything, I will send out an email or text. So make sure you are signed up. And at InsiderFinancial.com, what we're trying to do is put stocks on your radar with potential outsized moves. As I have repeatedly stated, there are always opportunities each day in the markets. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We're looking for those momentum plays that have catalysts. It's all about finding the momentum before it happens and riding that wave. That's what we're doing here at InsiderFinancial.com. And to get our small cap reports, we cover low floats, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com. No spam. Your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at InsiderFinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button, hit the notification bell to be notified when new videos uploaded. Have a great week, traders. Bye-bye.